Welcome back to HustleWise UK. If you have ever heard the words self-assessment and felt confused or worried, this video is for you. Self-assessment is one of the most talked about topics in UK tax and also one of the least understood. Millions of people in the UK need to complete a self-assessment tax return every year. Some of them have been doing it for years but still are not fully sure how it works. In this video, we are going to explain everything: what it is, who needs to do it, how to register, what the deadlines are, how to complete it, and how your tax is calculated. By the end of this video, you will have a clear and complete understanding of HMRC Self Assessment. Let us get started. Before we begin, a quick disclaimer. Everything in this video is for general educational purposes only. It is not personal tax or financial advice. Always check the latest guidance on Gov.UK or speak to a qualified tax professional for advice specific to your personal situation. Self-assessment is the system that HMRC uses to collect income tax and national insurance from people whose income is not taxed automatically at source. When you are employed and paid through Pay As You Earn, your employer deducts your tax automatically before paying you. But when you have income that is not taxed at source, such as self-employment income, rental income, or other untaxed income, you are responsible for calculating and reporting that income to HMRC yourself. Self-assessment is how you do that. You complete a tax return. You declare all your income. HMRC calculates or confirms the tax you owe. You pay it. It covers the previous UK tax year, which runs from the 6th of April to the 5th of April the following year. Not everyone needs to complete a self-assessment tax return. You need to file one if any of the following apply to you. You were self-employed as a sole trader, and your gross income was more than £1,000 in the tax year. You are a partner in a business partnership. You earned rental income from a property. You received untaxed income such as savings interest above your personal savings allowance, dividends above the dividend allowance, or foreign income. You earned income from selling goods or services on digital platforms like eBay, Vinted, Etsy, or Airbnb above the relevant threshold. You had total taxable income above £100,000 in the tax year. You received child benefit, and you or your partner earned over £60,000. HMRC may also send you a notice requiring you to file a return even if none of these apply. If HMRC sends you a notice to file, you must file even if you have no tax to pay. Before you can file a self-assessment tax return, you must register with HMRC. When you register, HMRC will issue you a unique taxpayer reference called a UTR number. Your UTR is a 10-digit number. It is your personal tax reference and you will need it every time you deal with self-assessment. To register, go to gov.uk and sign in or create a government gateway account. If you are self-employed, register using the self-employed route. If you have other untaxed income but are not self-employed, use Form SA1. After you register, HMRC will post your UTR to your registered address. This can take up to 10 working days or up to 21 days if you are abroad. The registration deadline is the 5th of October following the end of the tax year in which you first need to file. Do not leave this until the last minute you need your UTR before you can file your return. There are 3 key dates you must know for self-assessment. Date 1, 5th October. This is the deadline to register for self-assessment if you are filing for the first time. You must register by 5th October following the end of the tax year. Date 2, 31st January. This is the deadline to submit your online tax return. It is also the deadline to pay any tax you owe. Both the filing and the payment are due on the same day, the 31st of January, by 11:59 p.m. Date 31st July. If you make payments on account, which we will explain shortly, the second payment is due by 31st July. The tax year for the 2025 to 2026 period ends on 5th April 2026. The deadline to file and pay for that year is 31st January 2027. Mark these dates now. Missing them triggers automatic penalties. Before you sit down to complete your self-assessment tax return, you need to gather your documents and information. You will need your UTR number and your national insurance number. You will need your P60 or P45. If you were employed during the year, these show your salary and tax paid through PAYE. You will need records of all self-employment income invoices, sales records, and bank statements. You will need records of all business expenses you are claiming. You will need information about rental income if you are a landlord, total rent received, and allowable expenses. You will need details of savings interest received and dividends received. You will need information about any other untaxed income, including income from digital platforms. Keep all of these records organized throughout the year. You must keep them for a minimum of 5 years after the 31st January deadline. The simplest and most widely used method is to file online through HMRC's Self Assessment portal. Go to gov.uk and sign into your Government Gateway account. Select Self Assessment and then select Complete your tax return. The return is called the SA 100 form. If you are self-employed, you also complete the SA 103 supplementary page. If you have rental income, you complete the SA 105 supplementary page. You enter all your income figures, expense figures, and any reliefs or allowances you are claiming. The system automatically calculates your tax bill based on what you enter. You review the calculation. If everything is correct, you submit the return. You will receive a confirmation reference number. The online filing deadline is 31st January each year. A paper return has an earlier deadline of 31st October. Always file online, it gives you more time and is faster. Your self-assessment tax is based on your total taxable income for the year. HMRC first deducts your personal allowance, which is £12,570 for 2025 to 2026. Any income below this amount is tax-free. Income above the personal allowance is taxed at the following rates for 2025 to 2026. Basic rate, 20% on income between £12,571 and £50,270. Higher rate, 40% on income between £50,271 and £125,140. Additional rate, 45% on income above £125,000 or £140. Your self-employment profit is added to any other income you have, such as employment income, rental income, or savings interest, and the total is what determines your tax band. If you were employed during the year and tax was deducted through PAYE, that amount is credited against your total tax bill. You only pay the difference through self-assessment. Payments on account are something many first-time self-assessment filers are surprised to discover. If your tax bill for the year is more than £1,000 and less than 80% of your total tax was deducted at source, HMRC requires you to make advance payments toward the following year's tax bill. These are called payments on account. There are 2 payments. The first payment is due on 31st January at the same time as your main tax bill. It is 50% of your previous year's tax bill. The second payment is due on 31st July. It is another 50% of the previous year's bill. So on 31st January, you may be paying your tax bill for the previous year plus the first payment on account for the current year both at the same time. If your income drops in the following year and you believe the payments on account are too high, you can apply to reduce them through your HMRC online account. If you miss the filing deadline or the payment deadline, HMRC will charge penalties automatically. Late filing penalties. Day 1, £100 automatic penalty. After 3 months, £10 per day, up to a maximum of £900. After 6 months, 5% of tax owed, or £300, whichever is higher. After 12 months, another 5% or £300, whichever is higher. Late payment penalties. 30 days late, 5% surcharge on unpaid tax. 6 months late, another 5% surcharge. 12 months late, another 5% surcharge. Interest is also charged daily on any unpaid tax at the current HMRC rate. If you cannot pay in full, contact HMRC as soon as possible to set up a time-to-pay arrangement. This allows you to pay in installments and stops enforcement action while the arrangement is in place. Let us bring it all together. Self-assessment is HMRC's system for collecting tax on income that is not taxed automatically. Register by 5th October. File and pay by 31st January. Keep records for 5 years. Your tax is based on total income minus personal allowance, taxed at 20%, 40%, or 45%. Payments on account may apply if your bill exceeds £1,000. Penalties start immediately if you miss the deadline. If you found this video helpful, please like it and subscribe to HustleWise UK for more plain English UK tax guides every week. Drop your questions in the comments below. We answer every one. Thank you for watching. See you in the next video.